We do want to touch on this whole war that's going on, because we actually spoke about this quite a bit, didn't we? Whether certain companies, particularly our trading platforms that we use, are gonna float quite well. And I think this came up because Free Trade have done another dilution offering. You guys will know a lot more about that than I do, though.
I'll give you a really quick rundown because I'm sort of conscious we are towards the top end of our time. So we got an email through Free Trade announcing their annual crowdfunding campaign, which is set to go live early next week, I think it is. So it's now an annual campaign because they've done it every year since 2016. There was a load of crap in there about how good the bull market's been, and they've had a 30 times multiple on their annual run rate, but now that's slowing. They've had to take on convertible debt from people we've never heard of. It looks like the companies that were originally interested in them are not so interested anymore. There's some interesting stuff in there about them making tons of redundancies and cutting the marketing budget and still losing £1 million a month, which is pretty bad for a company that raised 8 million last year. Kind of tells you if they don't have an awful lot of run rate there, they're obviously looking to take. They must be looking to take at least another 8 million on to go with the 30 million they've raised in convertible debt. I've long since told you that I'm not interested in Free Trade. I don't think they have a sustainable business model. I don't think they actually have a single redeeming feature that differentiates them from any other broker. And I think Trading 212, eats their lunch every opportunity. I don't think their, Trading 212 is the evil one narrative is going to stick anymore. I think they've really sort of politicized the trading company, the investing company debate, and I don't think that washes with people anymore. Trading 212 is now fully open, and I fully expect a lot of people to transfer in April.
That's interesting that you said the annual VC event, because that I know it's annual because they've previously did it every year, but that means they're going to do it. Suggests they're going to do it every year, and it's like something we should be happy about. If when a company is saying, "Oh, every year, by the way, we're going to ask for new cash."
Yeah, I'm not sure we should be happy about that, and I'm not sure they called it that. It might well be the case that they do that in the future, but that does speak to the thought that we've expressed on this show a few times about dilution, I guess. Dilution hurts existing shareholders more than it hurts kind of joining shareholders, assuming they don't buy it at the wrong price, in which case it's bad for joining shareholders. But, I mean, if a company's been diluted 7 times versus 9 times versus 15 times or something in the past, all that matters to you is if you're joining now, whether they're going to continue to do that in the future. The debt stuff that Steve mentioned, which is convertible, that is your concern. But I do kind of think about some of these kind of dilution points. We talk about sort of stock-based comp a lot with the US on this sort of thing. Joining once the dilution's finished is kind of fine. It doesn't much matter to me how much dilution's gone on in the past. I care about how things look sort of going forwards in this case. I mean, Free Trade isn't something I'm particularly interested in investing in, to my knowledge here, but I also noted that things, Steve, you pointed this out in chat for us, things don't look amazing for another UK platform either, specifically Hargreaves Lansdowne, and I got to feel like they can't all lose, can they? What the hell are we going to do?
I don't think Hargreaves Lansdowne's going anywhere. I think it's got enough hoity-toity people in there that are willing to pay $9.99 a share, or it is quite cheap to get in on their OICs and stuff like that. So I don't think it is that bad, and a lot of people will pay for premium. They will pay for security and safety. So I don't think it's going to do that. Like, it's not going bankrupt, isn't it? I don't think it's necessarily got any debt. I don't know, actually.
It's now the most shorted brokerage on the FTSE, though, and that is an interesting little fact. I think 5% of its shares are now out short. And the other thing about Hargreaves Lansdowne is, as you reminded us last week, Paul, you showed us, they're now down with the kids offering select investors
that pissed me off.
One free share transaction.
Yeah, no,
one free
well.
share commission. It just didn't get me right. It just got me when that email came in. I was like, what is their customer? What do they think that who do they think their customer is? Because it aimed at absolutely no one. If you're aiming for your high end customer, they don't give a crap about one free share. Like they don't give a crap about saving $11.99, but your low end customer is not going to be happy with only saving $9.99, $11.99, $9.99, whatever it is, and that really annoyed me. That did, and perhaps the reason why it's the most shorted stock on the FTSE is because, or most shorted broker on the FTSE, is because it's perceived as this dinosaur company. It's really they're locked in a cage, and they are not seeing what's going on outside of their own little bubble that they're in.
I was just annoyed by this because I'm also an HL customer and I didn't get a free offer of a share, a commission-free trade into anything. It's just for special people like Paul who have more money with them than I do. I, by the way, since then have transferred my LISA out in process.
Have you?
Yeah.
Thing is that HL they're being ignorant to the customers because they've just been in a bull market where trading volumes have been exceptionally high, and they've also been recipient of that. I wonder just how high those trading volumes are going to continue to be, and whether they're going to continue to see the little bits of growth that they used to expect, or whether they're going to start to see a decline in their trading volumes overall. And they need something to put the frighteners on them, because yes, every time we say H&L is too expensive, we have somebody in the comments telling us they've found a specific workaround to buy something cheaper. But the fact of the matter is, for the vast majority of people, it costs an extortionate amount of money to buy anything on H&L. And for the vast majority of the time, you can buy it cheaper elsewhere. So what is the point? I wonder if they're being intentionally ignorant, or whether they really do think that they've got some kind of superiority complex here. Because I just don't see why anybody would. I understand the safety angle of H&L, but there's a lot of people out here now telling you 5% of those stocks are out short, saying that they think the value of this company is going to go down, and going to go down pretty significantly. So how safe is it going to be with a crashing share price?
Damien, I feel like you had something you were going to say then.
No, I mean, I know some contractors who work at HL, high paid, 750, trying to figure out the back end because it's a mess there as well. I can't say too much, but essentially the business tech wise is light years behind some of these new brokers, and I do think that's important for a lot of
just buy
investors
one
as well. Just buy one of the brokers. Yeah, that is an answer. But they seem to, like a lot of these change management is like a big thing there. Paying $750 a day for change managers to come in and basically try and get them unravel these big balls of problems that they've got, where they're on all these different systems that are just not communicating. So from my perspective, it seems expensive going to the customer, and a real mess from the back end. So I don't know. I'm not bullish on HL.
You can tell just by their app how bad they are for that. And I did wonder if they are leaning on that legacy, they're leaning on that
trust
brand thing, because it is the big thing. Even people of the similar age to me, when I was starting getting invested, the reason why I started with H&L is because they told me that's what their dads used, and that was like the best one, sort of thing. It wasn't until I started having a little bit of a read where I realised that everyone was getting ripped off, and it was just not a smart place for me to be at that time. Other people, though, it still might be that peace of mind, and I understand that peace of mind that company has been around for a long time, and it's going to be around a long time. Because my worry next, and I didn't want to bring it to Trading 212 too much, but my worry next, and I think I discussed it with you guys off air at some point. We're entering into a market where trading volumes are going to go down. Interest in trading and investing is a lot lower. People will have seen that from a lot of people's YouTube views, and you've seen all these mad investors that were investing in loads of hype stocks have all just disappeared. My God, I checked one that was famous on the Discord the other day. I didn't actually check it. My missus was checking it at the time, and she's just like, he used to get like 100,000 views a video, and now he's getting 800 views a video. And I was thinking, oh my God, the trading world and that hype world has really collapsed. And I wonder how much of the investments or that whole ethos was based around trading 212, if those customers are still there and if they're still investing, and does that make it, does that bring CFD volumes down? Does that bring share lending volumes down? Does that cause a bit of a problem there? And I do worry that in April or December or January or whenever they want to release their next set of accounts, it's going to show quite a slowdown in growth. Now, I don't worry about that because of the share price, because there isn't a share price and there barely anyone has anything invested in trading 212. A big benefit of that is that they have kept their VC very in-house and they don't have any debt. That was great. And obviously the revenues are quite big as well. Like, I think it was like 52 million last time we checked, but that's likely to be lower. I think the whole sector is going to be lower. We're going to see what's happened to Hargreaves, Lansdowne and IG and eToro. I think we are going to see that come down a little bit, which is then, could it lead to a lot of crazy videos saying that trading 212 is going bust? And is that going to lead to an outgoing of a lot of customers? And I do kind of worry about that. That is my only little bit of worry, is that customers will flood out as soon as people start getting worried and that growth slows because we had the bumper year and it's going to be tough comps. I don't know if that made a lot of sense and if I spoke too quickly on that one, but do you guys have a view on that?
I hear the view, so I hear the worry. The worry makes sense to me, right? We're on the kind of customer side of these things, and okay, we don't care about it from a share price perspective. We don't even really care about it from a business perspective. All that we care about is it going to be here long enough. This is something I don't worry about massively, because last time I looked, and this may well be a couple of years ago now, at 212's balance sheet, this is a phrase that we overuse in investing. I got the impression it wasn't going anywhere. And I mean that positively in this case. If it doesn't go anywhere, that's fine. I could just do with it still being there. There were worries around 212, and this goes into the kind of bucket with them, I think, about what happens if the thing collapses, what happens to all my shares, and do I lose all my money and all that kind of thing again. And this is something that Steve did a pretty good job fighting panic fires on about a year and a half ago, I think, when the stuff about share lending kind of came into prominence, and he explained in much clearer terms than I can that it's probably going to be fine even if 212 goes bust. Your shares are all held somewhere else. You're likely to get your money back, right, Steve?
Well, essentially, share ownership at the moment is a bit like spin the bottle. So everything is held centrally, especially American shares, all held in a big DTCC Seed & Co. Essentially account, and all they do is point the bottle at you as the owner, and then when you sell it to me, they just turn the bottle and point it to you. There is really, we are in a sort of digital ownership structure where you don't physically own anything and you'll be happy about it. But if it came to a brokerage going bust, they essentially will fill out a different bankruptcy form that a normal company would fill out. The assets are separated from their own assets, so technically there should be no claim on them, and it'll just be a case of spinning that bottle back to you at the new brokerage, whoever chooses to take it on. Which with something like Trading 212, when they essentially run off IBKR's API, everything is held by an IBKR partner institution. You would assume, should Trading 212 go bust, that everybody would just get grandfathered onto IBKR because it'd be so much easier and less hassle. And any shortfall in the accounts, that is when shares are in transit, being lent, can't be recovered. Whatever happens, the likelihood is that the FSCS would pick up the shortfall on those accounts. That's essentially how share ownership works in the UK at the moment.